Hello, everybody. Let me be sure here.
Check, check, check. Oh, perfect. There we go. Welcome to today's live stream, guys. We are going to have a really big week. As a matter of fact, I want to start out by taking a look at what we have ahead of us for this week. So, tomorrow morning we have CPI data coming out, which will be a really nice indicator as to what we could expect for the FOMC meeting. Taking a look back on some of this stuff here, let's just take a look. January hit expectations. February was the last time that CPI came in hot, right? We were forecasting 6.2, came back to 6.4. And if we go ahead and look back at some of these dates, we can kind of take a look at like how price reacts to that data release, right? But we can see that the last two came in good, right? April and May both came in good. So the idea is that as long as inflation continues to decrease, that's a good thing for the market because it suggests that the Fed will pause increasing rates, right? Otherwise, if it comes in hot, that gives them more reason to continue raising rates over time. So that's ultimately that's really what the market's looking for. So this will be a really nice indicator tomorrow going into Wednesday. But altogether, I mean, looking at all this, the data release for this week, we can expect a lot of volatility. And typically, what ends up happening, and it's so funny because we know this, we've seen it a million times. What ends up happening is we get the Darth Maul candle. We wreck longs, we wreck shorts, and then we range, and that's typically how it ends up playing out. And then shortly thereafter, price actually decides what it wants to do, right? So let's go ahead and take a look. I wouldn't mind. I'm just going to hop over to our. Let's actually go to our. Let's go to our daily chart. Let's go to our daily chart. I'm gonna go ahead and move this over here. And just to check, I want to be sure everything's all good here. Yep, the stream looks good. Okay. So here's what I'm going to do. I'm going to take a look at the last 1, 2, 3, 4, 5. We're going to go like this, take our horizontal, okay, and we're going to look at November 2nd. November 2nd. December 14th. February 1st. March 22nd. And May 3rd. So these are all of our FOMC meetings. I'm actually oh, that's perfect. Okay. Okay, so these are our FOMC meetings that we have. I kind of want to just make these align. Uh, okay. These are each of the last FOMC meetings. Um, September, I guess we can go back just a little bit more. September 20. 1 and July 27th. So this is as far back as I'm going to go. These are all of our FOMC meetings, okay? Next, I want to do CPI. And we're actually going to label these. All right, we're going to go, we'll go to July 13th. That will be our starting point. And July 13th was red, and I'm going to mark out all of the red ones right now, okay? So anytime CPI came in hot is essentially what I'm going to mark out. So July 13th, September 13th. The next one is October 13th. The next time it came in hot after that was February 14th. And that is it. Okay. Now we're going to do when it came in good, so August 10th. And this would be green. November 10th. Is that right? November 10th. December 13th. April 12th. And most recently, May 10th. Lastly, we're going to do days that it came in neutral, and that would be January 12th. And we'll go ahead and mark this white. Neutral days, where it came in as expected, and March 14th. Okay. All right, so here's all of our CPI data release days. And something I want to point out to you guys that I think is really interesting. You know, people really love these data release days. I mean, for the longest time, people were crazy about them, and they'd say, well, if it comes in hot, then we're going to dump. If it comes in good, then, you know, we're going to pump. All right, well, it came in hot here, and what did price do? It pumped. Okay, so it did not at all what you would expect, right? It actually marked the bottom. Price came in, or CPI came in good, better than expected here, and what then happened? We dumped. Bad here, dumped. Bad here, pumped, right? This one virtually marked the bottom. It came in good here, and we dumped off of that. Came in as expected here. We pumped on that. Came in bad here, and we pumped on that, right? Neutral, pump. Came in better than expected, dumped. Better than expected, dumped. So the thing I really want to point out to you guys here is that the CPI data release, for all intents and purposes, in my opinion, doesn't really, I don't want to say it doesn't matter, but here's all that it's going to do is create volatility on the day. So if we go ahead down to like our hourly time frame, and we actually mark out when this happened, right? So, you know, here was, and we can see that it's getting less and less important, but it essentially happened, you know, right in here. And we have this nice bit of volatility. This one, you know, it happened right around here, and we had a nice bit of volatility. And if we go further back, you can see more volatility on those days, right? You know, essentially here you get that Darth Maul candle, right? Wreck both sides, and then price kind of goes about its day and does whatever it's going to do. Same right around here, get this nice bit of volatility, and then price goes on and does whatever it's going to do. So, the point is that both sides are going to get wrecked, and then what's going to happen? Price is going to do whatever it was going to do in the first place, and the price action that we see here is already, in my opinion, giving us the signal as to what could be expected for our next move. Okay, and looking at the FOMC, pretty similar. I mean, does it mark pivots? I guess we can see that it does nicely mark some pivot points. So maybe we could get a nice pivot, from here to the upside then, or simply continuation to the downside. The FOMC does seem to, at least to some degree, mark pivot points. So that is kind of nice and something to be aware of, right? So there's that. I just wanted to go through and share that with you guys. It's something I think that like a lot of people, we place so much weight on these events, when in reality, you can see that the data doesn't always indicate exactly what's going to happen, right? It's not always going to be what you would expect would happen, okay? So from there, let's go ahead and actually do a bit of a deep dive into the charts after taking a look at what news we have upcoming this week. We'll go ahead and start with our weekly chart. We do not have a new weekly level. The weekly closed below the 200-week moving average, which we know is a very very key level of support for BTC and has been as such for a long time. We can see that the level resistance, and that's this red line, by the way. Support, closure below. So there's a couple options of something that could happen here, right? We can look at the possibility of a deviation of the 200-week moving average. We would want to see probably a closure above this week, in my opinion, for then, a closure above and then continuation to the upside if we are going to see, a further move up. That said, I will say that this price action feels, for lack of a better way to put it, it feels heavy, and it feels like we could easily just get like, a straight drop to like 22 like this in a week's time. It definitely feels like that could be on the table. So one thing I had said is that as long as we held the 382, I was going to be somewhat confident that we could see some degree of continuation to the upside. We've since lost that level, and we're now at the 0.5, and that's not necessarily a bad spot either. I would really like to, again, I would like to reclaim that level along with the 200-week moving average. If we go ahead and backtest the 200-week moving average, which is about 26,500, and we reject from that again this week, that would be, a flip to resistance, and, at that point we could start looking at, the possibility of more seriously taking the possibility of a move to the downside. So if we backtest sort of this 382 area, about 26.5, 26.6, and we reject from it, I think that would be a pretty clear sign that this area is flipped to resistance and we could look for lower. If we're able to reclaim that zone and get a closure above, I think that, again, it's possible that this wave 5 could be happening. Again, it's I think this move up is losing steam. I'm not so confident in it. I mean, we could continue to slow bleed to get some kind of a drop range and then, have the continuation to the upside. So we'll kind of have to keep an eye on it. But again, those are sort of our key levels to keep an eye on moving forward. Okay. Taking a look at our daily chart that we've been watching for a time, we can see just how respected this upwards channel has been, midline and all. So we can see that we're right at the bottom of this extended fib channel. We do have some key areas of resistance just below us, which is about this 24.2, 24.5 zone that we've been watching for quite some time. You know, if you go ahead and look, we have that. Do I have it drawn out here? We have this original channel, if you guys remember. You know, the channel from here, we deviated here, reclaimed, moved to the top, rejection, got to move back above it. It would be appropriate to, you know, back test the top of this channel along with this nice macro upwards trend line that we have down here. I'll go ahead and hide this just to create some clarity of what I'm looking at. It would make sense to see that move down. So, you know, for me, I'm definitely going to be setting an alert for this zone. If we do get a move down here, I'm going to open up a long. Simple as that. If we fall through the level, I'll be looking more towards this monthly level, and there's also a monthly naked point of control down there, and that's something else that we can take a look at on one of our next charts. So again, you know, for me, we are at an area of support. I am currently long, and I'll talk about that position. I'm also short. But if we were to break down, I would look to close my short around this 24.2, 24.5 level, along with this macro uptrend and the top of our previous channel here that was resistance, resistance, looking to back test that area to flip it to support along with this macro trend line. These are two macro levels, very key macro levels. So, you know, with that said, when you have two major high time frame levels that coincide together like that, when price hits it, you know, it's definitely a trade that you want to take. Pay a little bit less attention to lower time frames and take that higher time frame trade. So I'll definitely be looking for that. Okay, just something to keep in mind there. Taking a look at this lower time frame chart, I had drawn this out quite some time ago. Initially, I had the move happening a lot faster, but for all intents and purposes, we've essentially gotten something of the move I was looking for. Obviously, this happened. This consolidation is happening here below this area of resistance, but what I was looking for was a move down here, a bounce. I longed this. I closed the long like right around here. And we obviously got to move up a little bit higher. I could have held it, but nonetheless, I got this nice move to the upside. From there, we rejected from the midpoint, kind of what I was looking for. Got this move to the downside, cut through. I was looking for some degree of a deviation here, similar to this formation, and a reclaim of this level here and a flip to support, and I would say we'd trade back to the top of the channel. Okay, so for all intents and purposes, we can go ahead and scrap this. We don't need it anymore. Basically, that move is happening, right? We got this move up, back test the 618, get a move down. We are creating an ascending triangle. We break to the upside, reclaim this area as support, and we can look to trade it to the top of the channel. And that's essentially what I'm looking for right now, is the reclaim of the top of the channel, allowing my long to run. Otherwise, okay, like I had mentioned, I'm short from in this zone here. I'm short, and I'm in a one-to-one position. So if price breaks up, you know, above this level, my short will get stopped out and my long will run, and I'll go ahead and add it on a back test. If we break down, you know, below here, my long will get stopped out and my short would run presumably, like I said, to about that 24.2, 24.5 zone. Okay. So for all intents and purposes, you know, keep this very, very simple. We are simply in a range. Go ahead and get rid of that. We're simply in a range here, right? And we've deviated the range, and we're looking to reclaim it, possibly considering this an ascending triangle, you know, as we near the FOMC meeting and the CPI data release. I could see, say, a fake out to the upside on a Darth Maul, and then, you know, a move to the downside and a closure below or above. Right? So something like this I would not be surprised of, right? As we near the apex of this ascending triangle, to see a fake out to one or the other side, and then maybe the actual move to sort of play out later on in the day. Um, I wouldn't be surprised to see something of that nature. Okay. Um, Taking a look, let's see. I had it drawn out. Yeah, so this was kind of my, what I had drawn out previously, and I had shared in the Discord. And we're kind of seeing that play out, right? And I updated this, like I said, sort of expecting some degree of a deviation because BTC has just like loved making these deviations. Not to mention we do have this like harmonic here, right? There is a harmonic here that is still technically valid. We have played out at the very least to take profit one on here. And oftentimes with harmonics, you'll see them come very, very close to invalidating, and then having some degree of continuation to the upside. Still eyeing that 29.2 level that I'd really like to see hit. Okay, so if that harmonic continues to stay valid, this turns out to be an ascending triangle deviation below range low. A reclaim we can trade to at the very least range highs. Break above, we look to that 29.2 zone. Otherwise, if price does continue to reject here, let's say we do have that fake out and a closure below, then we can go ahead and follow this path down to about that 24.2 level. Okay, so just keeping it as simple as possible, that is essentially what we are looking at. Okay. All right, so from here we're actually going to take some time and update our chart. Oh my God, I had a cup of coffee this morning. I never drink coffee. I don't drink like caffeine at all. And man, I had a cup of coffee this morning. I love coffee. I mean, I love the taste of it. And boy, I'm buzzing right now. Buzzing pretty hard on the caffeine. So I do want to take some time and update this chart. So we do have that daily, weekly naked point of control around that 24.3, 24.2 zone like we had talked about for a time. Again, that does coincide very nicely with this upwards trend line here, but we are also starting to reach, depending on how you draw that upwards trend line, we are kind of coming up on it around here as well, which, like I said, if we continue to hold the low, well then, well, it looks like on this one it actually swept the low. I guess it depends on the chart you're looking at. What is this? Bybit? Yeah. Okay, so I'm gonna go ahead and just clean up our chart a little bit, and we'll do a little bit of updating, and then go from there. Let's see. Yeah, I'm just gonna get rid of that. Get rid of that. Let's take a look at our previous week levels, and maybe we can. So I'm going to set an alert around that 24.3, 24.4 zone we talked about. If during the volatility of the week we were to see continued move down here, and then a wick down in this zone, and then reclaim the previous week range. I think that might be a good signal to then at least trade to the previous week high. So basically, the previous week low, I wouldn't be looking either for like a swing failure pattern of the previous week low. I'm actually so setups, swing failure pattern of previous week low, deviate previous week range 24.2K, and reclaim equal up. Yeah, for me, I really like this idea. I like this previous week range that we had here. I'm going to keep an eye on, like I said, the previous week low. Essentially look for a swing failure of the previous week low, bounce off this trend line here, or a deviation, getting a move down to this lower trend line, reclaim the previous week low, to then look for continuation to the upside. On the other hand, if we do get a move up, I'm not really going to look for I'm not going to look for a swing failure in this zone. I would actually think that we would get the move up to this weekly level. If anything, also basically looking for a, say we get this swing failure here, and then, if we get, that swing failure here on Wednesday, kind of the mall candle, and then, we have sort of continuation to the upside. I'm going to look for something like this, to which, we could just reject from there, or maybe we get, a swing failure, whatever, and then, we basically just look to trade it back down. I could see something like this, to which, we'd basically continue to range, or we would, break down for lower. Yeah, I would say these are my two ideas that I have right now. So I have an alert set at that low. I'm going to set one. I'm going to go down to a 4-hour time frame here. Let's do a little bit more. Let's get a little bit more stuff on this chart here. I want to take a look at, so we don't have a new month. So this is our monthly. We have a monthly that's lower. Okay, these are our two untapped monthly levels. Weekly, we don't need those. We have an untapped weekly lower, not relevant in my opinion. We have this untapped weekly, which is a great level. Let's look at our naked point of controls. Okay, so that weekly NPOC is a little bit higher. I'm gonna have to set an alert on this one. Yeah, I could see like if we did move down, I could see us do something like this, bounce, swing failure, reclaim, trade up. Otherwise, we just continue down. Could see something like this because we have these nice two levels here, so that's something to consider. What else do we have for NPOC? Monthly NPOC much lower. We have a daily naked point of control here. I want to check to see if that's tapped. All right, well, if you remember, earlier we were talking about that 26,500 zone, which is also the 200-week moving average, the 382. There's also a weekly naked point of control there. So again, this would be a really nice area to back test and reject from, if we were going to see some degree of continuation to the downside. Yeah, so this one was tapped and rejected from to a T right here. So that played out. Another one, daily, okay, so that 24,800 zone is pretty key. Okay, I have an idea. Okay, so this is my thought process for right now, but here here's the deal. If you want to make this as simple as you possibly can, you set an alert, right? I have one on this naked point of control here, this weekly naked point of control. Possible short reject WNPOC plus 200 weekly moving average plus macro 382. All right, so that we would trade that down. What I could see happening is we sweep the previous week low, maybe get some degree of a bounce, range through the weekend, take out that low, swing failure, like multiple swing failures on the move down until we finally get to this, basically, this untapped daily plus this weekly naked point of control zone, right? This sort of green box here. We would look for then a deviation of what would have been the previous week low, a reclaim of here. This would be your conservative entry on a long that we would then look to trade to the previous week high over here. I think we would swing failure that, some take profits, and then get a move up to the weekly, wrecking whatever shorts were here. And then from there it's anyone's guess, right? There's no telling what could actually happen from there. But my best guess would be to have some kind of a trading plan like this. I just want to take a look too to see. Yes, brilliant. Look at that. I just drew this out, and you can see just how perfect it would play out along with this channel as well, right? We've had this nice macro channel, the upside. We get this move down and be a nice back test of that channel, along with the weekly here, taking out the previous week high, deviating the previous week low. Hit this really nice high time frame trend line here, and then from here it's anyone's guess as to what we can do. But this would kind of be my trading plan coming up. So basically I have my alerts set in this zone down here, okay? where I will be looking for a long. If price simply falls through here, then we look lower to this monthly level, okay? Next, I have a short-term short position that I would look to take around this weekly naked point of control at about 26,400, right? In that zone, I have an alert set. We get the fake out with the ascending triangle. Boom, take the short. We trade it down. Great. My next area, if we simply break to the upside and have a move up, I'm going to look for a sweep of the previous week high here. Possibly have that be a fake out for a move down to then an eventual move up to this weekly here. That we would then trade lower, right? This would be a really nice short position. If we got this before here, I might look to short this area, okay? So this is kind of the setup that I would be looking for. I think that this would play out really nicely. Let's take a look at our liquidity data and we will wrap it up. But ultimately, this is, I really like this. I'm going to go ahead and just clean it up a little bit because I don't think you guys need to see all of these levels on here, but let's go ahead and clean this up. Just to make it a little bit more neat. Right, I think this is about as clean as I can make it. This is kind of something that I'm looking for. So a little bit more bleeding, a little bit of an acceleration of the move down, hit this zone, massive bounce to the upside, clear, and then, we can look for some possible shorts here as well again, right? So for me, I like this setup. I think this is a really nice move. Again, if we just simply get the move to the upside, then we'll look for shorts. So keeping it as simple as possible, one last time. I have alerts set for a long here. I have alerts set for a short in this zone up here. I also have a lower time frame short position from here, about that 26,400 zone, which is our 200-week moving average. We have a weekly naked point of control there, and also the macro 382. So a back test and a reject from there, we would look for a lower down to the trend line, the untapped daily, and the weekly naked point of control lower here. From there, a bounce to the upside, we'd be looking here as well as this 28K untapped weekly level. One last thing I want to take a look at here. Yeah, okay. So definitely that 26,600. Basically this zone here, I definitely want to be looking for a short position in there. So I do have my alert set for that if we do get that move up to about that 26,600, 400 zone, whatever, where all of that really nice confluence is, then I'll definitely be looking for a short. And guess what? That untapped weekly is also the point of control of this range. So again, another great source of confluence. I really, really like this plan. Okay, so we'll just have to wait and see what happens. I think this looks good so far. All right. We'll take a look at that liquidity data to see if we have, if the liquidity data does support our thesis for the week. Yeah, I don't really think this is balanced territory. We could do a small squeeze, but really, yeah, this is virtually neutral in my eyes. Let's go to 7 days. All right, so we do have a decent amount of liquidity, about 26,900. We could front run that and build more liquidity if we got that move up to that 26,600 zone. So that would be a nice, Wednesday Darth Maul. I would be expecting kind of this move up right here around here, right? So like this would be really nice. That Wednesday Darth Maul, the high will be put in here. We could take the short. It'll go a little bit lower, and we can trade that. So that looks good. That does support our thesis. We'll look at the 1 month. Massive amount of liquidity around 24,200, 24,500. So yeah, that short-term liquidity grab, right? Slow bleed downwards to about that 24,200 zone. Boom. Okay, so yes, this also supports our thesis. The liquidity data here supports our thesis, right? And then getting this move down will build up some liquidity to the upside. And right now we're looking at about 28K, which is exactly our final target, 28K. So again, the liquidity does support our trading thesis coming up for the next couple of weeks here, along with the FOMC. The 3 month, yeah, we can see it kind of supports that. If we were to get that move, I mean, I think this is as far as I'm willing to predict out. I'm looking basically a week and a half out here. So yeah, for now, I like this idea. Let's stick with it. We'll go ahead and update it as we go. Again, what are we doing? Wednesday, Darth Maul candle, short this zone. Later on, slow bleed, long this zone. Trade it up to here, possible rejection. Key zone for a short. Okay. And I think that is about it. Let's take a look at our funding rates. This is more short term. Yeah, virtually neutral. Not a whole lot there. Spot CVD been virtually down only for a very long time. You can see here the green line, down only. Price is being held up by perps. So yeah, this everything pretty much supports that trading theory. I really like this idea. I think that this is going to be a good plan for us in the coming week and a half ahead. I'll take a couple minutes. We'll sit here. If we have any questions, feel free to ask at this time. If we don't, I'm going to go ahead and wrap this up. Yeah, thanks for watching, Noah. I appreciate it. It's always fun to do these. Well, it looks like that's about it then. I'll go ahead and wrap this up. If there was any other questions, feel free to ask in the Discord. I'll post these charts with a nice little message kind of talking about what we reviewed, and that'll be it. So enjoy the rest of your week, guys. I will be active in the Discord throughout the week, especially on Wednesday. And, if need be, I will do a market update video later in the week to keep us updated. All right, see you guys. Enjoy the rest of your day.